All right. So I apologize for the audio quality here. My son has a really good microphone that he uses for gaming, and I'll probably try to borrow that from him. But anyway, I wanted to just kind of comment on why trading forex. It's really challenging. I think I mentioned in the last video. And another apology is it was really shaky, so I won't do that. But I'm just using screen capture program here to capture this. And I just want to say why Forex, it's really hard to trade. I mean, so many traders lose money. And I think it has to do with discipline, and it has to do with a strategy. It has to do with really three things, and I'm not the first to put this together. Again, I've just researched a lot, but there's if you look here, it kind of makes a pyramid. There's your trading strategy, and all these three things have to be, you have to be good at them. You have to be good. Your system has to be in place. Your trade psychology has to be in place, and risk management has to be in place. I've bombed all three of these in the past. Every new trader will do this. They'll bomb these things. So what do I mean by that? Well, your system has to be, first of all, profitable. And the only way to determine if it's profitable is by back testing and forward testing. So back testing is looking at data in the back, that is in the historical data, to see how the system performs, how the strategy performs. And a strategy, just basics, is just a way of trading, rules of trading, or how to trade, that kind of thing. It has to be a pretty complete system, and have defined rules. In my opinion, it has to be profitable. It has to be tested profitable, both in back testing as well as forward testing. If you can't test your system profitably going forward, you don't have a good system. So that's the top part there. Next is trade psychology. Your approach to trading, not only does your system have to fit your psychology or your personality, it has to be tradable by you. It has to be continued by you. And so trade psychology really is huge, because I know they talk about emotions in trading, and that would be like greed, over trading, too much risk management, or not too much risk management, no risk management, and so over positioning in a particular trade for greed or for revenge. But they talk about also fear, not entering the market because you've had so many wins or something like that. So the psychology is more than that, though. I think the psychology is, can you be disciplined as a trader to make the trades day in and day out? Trade psychology is going to be crucial. Controlling emotions in order to trade a profitable system. If you've got the best system that you think in the world, but you can't, with discipline, stick to that trading system using proper risk management, you're not going to be successful. That's where all three come into play. So this is probably the biggest one that I've bombed, because you can find a system, and then in your analysis paralysis, or whatever it is, I think that's right, you can find another system out there. Oh, this is better. This is the holy grail, as some say. And so all of a sudden, you are not trading your system anymore. You're trading a different system. Well, you're going to spin your wheels. You're not going to go anywhere if you do that. And I'm speaking from experience. So that's why part of putting this channel together, I think, is going to be helpful, because it provides a little accountability, a lot of accountability, and moving forward, placing trades, having people behind me, and a community that we can do this together if you want. Again, this is educational, so I can't take, I'm not going to take responsibility for losses or gains, but that's just my thoughts there with that community, trade psychology. And risk management, you don't want to risk more than 1-2% per trade at the most. This isn't gambling, this is trading with an edge. This is a system that has an edge, that's profitable over time, and can you place appropriate risk management in place. Now, there is utility theory and all that, but again, I think that what that means is that you could have a system that trades with a certain with a certain edge, and you could place higher portions of your capital you could place at risk. But what'll happen is do you have the trade psychology? Do you have the fortitude to withstand those losses? And most people don't. I mean, I would say probably 99% of people can't play something over 1%, 2% and really be successful in the long run, in the long term. Anyway, this is kind of the three things I'm going to try to attempt on this channel. Let's start with the system. Let's start with back testing and testing a system that's going to work. Let's talk about trade psychology as we move forward. Let's talk about risk management and so on and so forth as we move forward. So the trading platform I'm going to use is this TradingView, a very common platform. I use Oanda as a broker. Oanda, however you say that, Oanda, I think it is. But I've been using them for a while, demo accounts, live accounts, and so on and so forth. But this really ties into that, and so I'll probably be placing trades on with Oanda instead of here. But so you can see it up here, but. And you can do it directly through here as well. This is not a paid account. This is a free TradingView account. So it allows up to 3 indicators on your screen, that basically help you with price and rules and all that. So that's what we're going to, this is what I'm going to use. And again, probably moving forward, it'll be a paid account. At some point I'll probably do that, but right now we don't need it for what we're doing. At least I don't think we do. I'm going to try to back test with this particular strategy, and I'll tell you what that is in a minute. Back 1,000 trades. I think that it's really worth it to go back 1,000 trades. Most successful traders have tested things 1,000, 2,000 times to see, because you want to know how it's going to perform in many different market conditions, whether it's rising market, falling market, sideways market. And then you also want to see what will happen, in various years, and over the years, how's it going to trade, how's it going to perform, and be confident about your strategy, confident about your ability to trade the strategy moving ahead. So I want to be able to go back and look at enough historical data to give me those 1,000 trades. Now, it doesn't have to be on one currency pair or one asset here. It can be on different ones. And so what I was thinking about doing is trading well, first of all, let me start with the pairs. I want to do just about 8 to 10 pairs. I'm starting out with kind of the majors with one cross pair in here, but this is Australian US dollar, Euro US dollar, the pound and the yen, Japanese yen. That's probably the only cross in there. And then pound US dollar, New Zealand US dollar, Canadian dollar, and US dollar Swiss franc. So these are the pairs I'd like. Oh, and US dollar yen. So these are the pairs I want to do, and 8 pairs. And starting at 1% risk per trade, 1% we're going to go for 2%. So in the next video I'm going to talk about the strategy. I will start by saying that this strategy is not my own. This strategy was developed by TradePro, Eric at TradePro, and shout outs to him for that. I'll link his video in the description. It's a great video about explaining what he uses a lot, and he's a successful trader, full-time trader, young guy, younger than me, but he uses this strategy, or he doesn't use this strategy per se. He tests a bunch of strategies, but they all kind of have the same core elements, and that is a long-term filter, a medium-term filter, and kind of a short-term entry filter. And the same is true here. So we'll talk about this a little bit later, but I'll just throw out there what these elements are real quick, and then we'll probably wrap this video up. So I'm going to try to make these videos short and sweet, try to be under 10 minutes, kind of a deal. This is a 200 period exponential moving average of the daily. The time frame that I'm on up here is a 4-hour time frame. So these are 4-hour candles or 4-hour time periods, and so this is the long-term filter. If price is above the 200 exponential moving average, we are going to go long. We're only going to take buy trades and not sell trades. If if it's below the opposite, we'll take sell trades and not buy trades. Second of all is the medium term filter, and that's the super trend indicator right here, and it's the red and the green, you know, all this is the super trend. So that's what this is, and this is going to be our short term, medium term or short term, I guess you could say, trend filter. So if price is above and we get a buy signal, that's when we're going to know to try to buy. We're not going to take sell signals when we're above the 200 exponential moving average, only buy signals. Of course, you're looking at not a very good example, right? I mean, look at this. The market's pretty choppy. It's pretty sideways. So I'm not cherry picking anything here with this strategy. I mean, we're going to test it. You're going to be with me testing this thing. Here's probably a winning trade. Actually, it is a winning trade. You can see I have it here. Here's another one. But yeah, not all of them are going to be. There's a losing trade here. Let's see. That's probably close to a winning trade. This is a losing trade probably. Like this is a winning trade or probably close to it. But the idea is that's what you're going to do. Now the third, the entry to this is going to be on a pullback to the 20 exponential moving average of the 4-hour time frame. And that's this yellow line here in the middle. So here's an example of a winning trade. I'm sure I could zoom in here a little quicker here. But so we get a buy signal here. Price is, oh, okay, you know what? This is probably an older trade off of a different strategy. But the idea is you want the trade to pull back, and it actually doesn't, so I can clear that out. But you want the trade to pull back and touch. Well, I guess it can kind of technically, but it didn't touch right here. See, here I am. You can't violate the system rules, and here I'm about to do it. So this, you really want it to touch the 20. So this one you wouldn't enter, but you want it to be able to you know, come up and then come back. So like this would have been a good entry here, because the price comes up, it pulls back to the 20, and you would have got in right here, and this would have been and actually I think that would have been a winning trade. So let me close that out. Let's do another one real quick here and I'll show you. So if we buy, price is above, oh, you know what, it actually would have been here. So price pulls back and we would have entered here. So I would have had probably a buy limit or something there, and so you would want to be about 2 times risk ish, and so there's our stop loss right here, and that's how the trade would have progressed, and we would have been out right here. So anyway, we'll talk more about the system rules and my journaling chart and back testing and all of that. And I want to go into this and really dig up and have you guys come with me in this process. Thanks for watching.